Teach, and I am with U.S. Bank, as Linda says. I'm responsible for the commercial lending portfolio in Oregon, Southwest Washington. And I thought it was very interesting that there was, in last week's Business Journal, an article on page 8, if anybody wants to go to it. It was it quotes a survey from the National Federation of Independent Business Research Foundation, talking about small business and the lack of credit and getting credit. And it quotes what they're saying is their reason and what their biggest concerns are. And it says that 51% cited poor sales as their most pressing economic problem, and then some other things. And only 8% cited access to credit as their biggest problem. Just to point out what that's doing to banks, we're seeing a lack of demand for loans. We would like to have more demand. We have money to lend and don't have anybody to lend it to. An example of that would be, banks. I knew that would get a reaction, but I'll go somewhere with that. Banks provide, one of the ways banks provide financing is through lines of credit. And the utilization rate on lines of credit is typically somewhere in the 40% range. And today, or as of the end of last year, ours was at 30%. So 30 versus 40-something% is a lot of money. And so when you read articles in the newspaper about banks not lending because their balances of loans on the books are going down, it's because people aren't using it. Businesses aren't doing some of the traditional activities they were doing because of the economy and lack of sales and losing money and those kind of things. Nevertheless, just on U.S. Bank's part, we grew loans 8.2% last year, made $9.5 billion of new commercial and commercial real estate loans. And so there are people doing it, and it is happening. Despite the ones that are having capital problems, there is still a lot going. But where I wanted to go with that comment about money to lend and nobody to borrow it, it's ironic that right next to that article about what are the reasons people cite is the title of the article is FDIC reports more than 700 problem banks. And that brought a 26% increase in the number of banks on the problem loan list or problem bank list for the FDIC. And so when I say, banks loan money to people who can pay it back, and it's hard to find that right now.
And as was said, it's hard for banks that...
The Credit Union Association of Oregon and Kelly Schrader with Unpoint Community Credit Union. Credit unions in the state of Oregon represent a unique niche. We have 82 credit unions across the state of Oregon. They are not-for-profit, member-owned cooperatives, and credit unions across the nation actually were chartered back in the 1930s, is where many of them started to really pick up access to capital concern, much like we're facing in today's environment with consumers and with small businesses. We're working on an initiative, and in fact we were just in Washington, D.C. last week and had a nice engagement with all the congressional offices on expanding the member business lending authority that credit unions do take part in. There's a cap of total assets that currently exists, and we're getting some good traction on that. In fact, nationally, a number of associations have signed on to our efforts. It would basically double the amount of member business lending that credit unions can do in the nation. Our economists are telling us, based on the studies, that it would create about an additional $10 billion worth of capital across the nation, and about 108,000 jobs across America. And so we're pretty excited to be able to have that kind of contribution. In the state of Oregon, the 82 credit unions, 40% of Oregonians are members of credit unions, and they represent about 26% of the market share. And so Kelly, I think will probably touch on what the member business loans actually look like in Oregon.
Sure. I think one of the things that's a common misnomer is that people don't necessarily realize within our state that credit unions offer business loans. Back to the micro business loan piece, that our average loan size is roughly $266,000, but it doesn't need to be that large, or it could be larger, or it could be very much smaller. But that it's to remember to come to your credit union and to look to them as an option. And I think as we sit around and we talk about some of the larger banks and the challenges that they've had, and that is that we're not here to compete or to talk about who had issues and who did not. It's that we can live in concert in our communities here and serve our state either at a credit union level, a commercial bank level, or a community bank level, and that there's money to be had, and we're here to serve that need.